Thank you for accepting our invitation. Great to have such a wonderful panel of experts from different parts of the economy, representing different views. Prime Minister Belka started with dividing the factors that influence the economy into internal and external. So let's start with the internal factors. And first of all, I would like to turn to Jean-François on the Polish services, ICT sector. Because as we know from data on manufacturing, the manufacturing in Poland is right now at the brink of the recession. The PMI index is below 50 points, which indicates that the output of production is falling. And that's one of the main drags to the Polish economy at this moment. But how is it in the service sector? Is it, do you feel the slowdown already there? Or everything is going till now smoothly and you have a good forecast for this year and you expect large growth? How is it in the ICT sector from your viewpoint? How are the services in Poland going forward?
So I really liked very much was what Prime Minister Marek Belka just told us, and I took note of it because I really believe this is what we are going probably to experience. A lot of people are talking about slowdown of the Polish economy. I don't believe in it, but I took note of what he said: deceleration of growth.
Okay.
Which is, I think, I completely agree with his analysis. This is totally different thing that is probably facing us. So just to be clear, on the ICT side, no, we don't see that at all happening at this moment. Of course, as industry players, we are praying for the economy to keep going so well in Poland because it's going very well, and especially again a lot of this GDP growth is coming from consumption, which is obviously good for our businesses. We you know at Orange we are a telecommunication provider, and 2/3 of our business is coming from consumers. So this is overall very good for the business. So at this moment, we don't see that happening. However, there are a number of concerns that are, you know, pretty well known. I mean, especially about the potential lack of workforce. We are investing very heavily for the last 2 years and continuing in fiber deployment in Poland. More than 3 million homes have been passed. So, as you can imagine, these are huge investments, and also these are needing a lot of people basically to, you know, dig the streets, pull the fibers. So we are very extensively using manpower currently, and these are one of the issues we are facing more and more: lack of or difficulties to find you know, workforce basically. To see one of the concerns we might have actually in the very short term or the middle term.
So how you tackle the lack of labor force in Poland, because we know that the population is aging. So you turn to those who are inactive and try to encourage them to be active, or you are seeking for...
No, we simply pay them more.
Easy as that, you know.
Yeah, as you say, easy as that. But,
do you hire...
We will come back on inflation and prices because this is, I think, another probable way things are going to evolve in Poland. I believe inflation will likely raise because there are a number of inflationist pressures. I mean, I'm not a specialist, I'm not a macroeconomist, but as a manager of a business like Orange, I see that there are a number of things that we are obliged to that are becoming more expensive. So we have a lot of pressure on our profit and loss, basically.
And do you also turn your head towards the east, to Ukrainian workers, or maybe even to Asian workers?
Well, I mean, it's not to you that I'm going to explain that there are millions of Ukrainian people working in Poland. So
one and a half,
something like that. So we are de facto, even if our subcontractors are Polish companies, they are employing Ukrainian people. Well, the issue is that, especially on some parts of the territory, we see more and more attraction towards Germany, because probably you know that Germany has started again also a fiber deployment program. So in our area, we really see some difficulties, and that we are you know, these difficulties, we were simply, the price have been increasing. So that's what's happening currently.
Okay. May, you are observing not only Poland, but the whole Central and Eastern Europe region. How does it look from London, the economic perspective for Poland in the context of the region? Do you see a slowdown or an acceleration of growth? Or you think, okay, it will be roughly as it was in 2018 if you take into account economic sentiment?
So I would want to say that Poland is in Europe, so our overwhelming view is what's happening to Europe. At this stage, we are quite bearish on what's going on in Europe. And this relates to the external demand of the global economy, what's going on with China, with trade wars. And I think CEE in general and Poland in particular are affected by these trends more so than what's going on domestically. But over the course of 2019, I do see a lot of cushion for the region as well as Poland in particular. First of all, the consumption cycle here, as you mentioned, is still going on very strongly. And second of all, I think that the election year, obviously, coming back to Mr. Belka's comment about the temptation to offset growth deceleration, there's definitely a feeling that there's some desire from Polish government as well as other government in CEE to give some stimulus to the economy in 2019 and 2020. And then you also have the EU fund cycle, which is helping investment. So overall, I do see deceleration, but I see our performance versus Europe. And I think this is key because we are operating in Europe. So our performance versus Europe is something, is a success in that sense already. In the longer term, obviously, we have been talking a lot about what's the next growth model for Poland when what happens if EU funds does not come. And also in the whole of debate about the auto sector relating to trade war, what does it mean for the auto markets in the region and in Poland in particular. And obviously these are all the downside risks. We don't see a lot of upside risk for the next decade. But I think what important is what you do in this decade will help you in the next one. So obviously the PPK plan that's coming up is another source of financing, which will hopefully create some savings and financing opportunity for next decade, because across the region I do have some concerns about Poland's savings rate compared to your peers, the Czech Republic or Hungary, and that is something that will be playing a very important role for the next decade in terms of self-sufficient for financing, some self-sufficiency. However, I do see opportunities because we talk a lot about, the growth model will not work and there will be some slowdown. But as a matter of fact, I think there's an opportunity from the perspective that although the downside risk in the global economy is ample from the trade war, from the end of globalization, I think we have to look for opportunities what Poland can offer, what CE can offer. And I think opposite to what some people may fear about reshoring everything to Western Europe or to US, we do see that there's an opportunity for Central and Eastern Europe as part of the whole European Union to benefit from any reshoring from the Far East or from other parts of the world back in here. And I think the biggest, the most important element is Western Europe will need CE as a part of the union in terms of production and consumption, but also it has to be based on some trust between the countries. You need to have a strong allies with Europe because you don't want reshoring back to a country that you don't know how the relationship will be in the future. And this is particularly important because in the world that we have of technology, it's very important that countries partner with others that they can trust. And essentially, this is why the tension between East and West is also based a lot on data and technology related.
By relationship, you mean political relationship, business relationships, legal relationships? What do you mean by that?
I think both. For example, there's definitely concerns about how China technology and intelligence is, taking parts into different parts of the world, and certainly the US doesn't want all of its intellectual property to be lost in China and trying to bring on back to North America. And I think it's still debatable whether it will be Mexico or Canada that will benefit of this trend, but I think it's evolving in a sense that there are opportunities for countries to grab if there's a solidarity among the allies and the regions.
Mm-hmm. Now I would like to turn to Minister Emilewicz. I have a temptation to ask a question about a temptation. Is the slowdown a temptation for the government? Can we expect some additional stimulus, as Prime Minister Belka was afraid of, that we will try to keep this growth at a 5% rate as long as possible with some kind of fiscal tools?
First of all, I must say that I am almost 90% agree with what Prime Minister Belka has mentioned.
Oh, I would like to know this 10%.
Really, but why? Because, of course, we do agree that the slowdown which we observed in the global world, it is not something unique for Poland because it is hanging on international conditions, because of the new custom policy of the United States, because of unsafe, unsecure, or undermined WTO perspective, which is now being in the discussion, or the tension between the United States and China. And of course, we are hanging on and we are depending, fully depending, on what's going on around. And just looking of the sources of this slowdown perspective, we are simply looking out rather than inside. But what is important, and I'm not going to say that there is a very, very difficult factor for Polish economy. Basically, why? Because this we are having quite a stable basis for this coming not so fast perspective in the coming years. Mm-hmm. Why this 5.1% of GDP? It is something, of course, which we want to maintain, but it will be very hard. And as you know, what has been put it into the Polish budget for this year, it is 3.6. And I might say that I can say that if we maintain where we are today, we can see the 4 at the beginning, at the end of this year. So it might happen. And why it is so solid and stable? Once again, the consumption, which has been mentioned by Prime Minister Belka. But is it worse? If we think about 2001, 2002, it was not so bad that the Polish speed of development has been based on the internal consumption, because it is less dependent on what is going on outside. The second point, the export, which is still stable. If you see the 2018, the export has been growing once again by 12% comparing with 2017. And although the balance between export and import was not so in favor, but still the export is growing. And stable overcome in services, for instance, which is 20 billion in plus for Poland. That means there is still very stable and comfort situation. And even though the Western partners, Germany, in the fourth quarter of the 2018, simply order less than they expected, it tackles us a bit, but only a bit. So I would say it is really stable. And the third engine, which is really tremendously important and has been put by Prime Minister Morawiecki in the strategy of responsible development, which is growth of investment. And yes, we can say, as another very famous Polish economist, Professor Hausner, has mentioned 1 week ago, the factor is not as high as we perceive 2 years ago. But still, we see the stable growth, and we see that last year it was 12% of growth of investment. And from my perspective, what is even more important, that we observe this investment in research and development. So the number of entrepreneurs which decided to invest in research and development has doubled in number in 2018. And also engines and robotization is the second important investment done in 2018 by the Polish entrepreneurs. That means that we are really creating a new value, and we are reshaping the engine of the Polish growth. And, well, is it a temptation? Yes, we are analyzing every data. We are not afraid because even the 4% or 3.6 it's really very safe perspective for the economy, especially once you think about the needs and demands of the market as a labor forces, for instance. So it is a real safe position to be transformed and to be changed a bit once again, to change from the economy which has been based on the cheap labor forces into more technologically oriented one, which is really going on and we are really observed it. And last remark, which is when I'm discussing with my colleagues from the Western Europe, the only factor which I'm repeating all the time is that our society, we are still hungry. And in this condition, it is something that is bringing the speed to this economy. So we are really hungry and we are eager to have success with a very rapid period. So a lot of people in this country are really pushing this economy. So the all factors which we observe, so this 5% of GDP and the more spendings on investments are done by the entrepreneurs. And this is an engine which is not going to be broken in this and the coming years. And we are observing, but we are quite on a safe position.
Mm-hmm. You are very optimistic about the future of investment in Poland, because if I talk to business representatives, not all business representatives share the view of Orange that we invest more. Some of them are afraid of labor shortages. They cut investment due to labor shortages. Some of them are afraid of policy instability, economic policy instability, especially this SME part of the economy, so small and medium business. Do you have any tools, any ideas how to encourage that part of the economy that is more afraid of those factors to increase their investment also in the forthcoming years? Because now we are at the peak of the cycle of EU funds disbursement, so public investment outlays will grow less. Maybe in 2020 they will fall as well. So how to stimulate investment, especially in those areas where it's mostly needed, so in small and medium enterprises and those high-tech investments?
Well, first of all, I would say that there's let's say quotations that people or investors are feeling in comfort and they are declaring that they are going to invest less than in the former years. I can't hardly find it because when I see the queue of investors coming to Poland nowadays, and especially facing with Brexit and especially facing those really difficult situation in the world, I can hardly find those who are saying, okay, we are not going to invest in Poland. So definitely the labor market is a question. And we have to, and I think that what has happened last year, when you see the wages in Poland and the growth in wages, it is something that might encourage some people, and this is what I'm actually now working on, and a special package for those Poles who emigrate after 2004, so when Poland joined the EU. And we would like to present the offer for them to encourage them to come back to Poland. So it is
What's
a huge diaspora. As you know, in London, so I will declare it, I will unveil it at the end of this month. So
okay.
I will do it, definitely.
A little bit patient.
So of course, but it is going to be based on tax incentives. And it is not something not unique in Europe. We've got this kind of package in Portugal offer in the middle of last year. We've got some similar proposals from Bulgaria and from Czech, and they are also well known in India and other parts of the world. So this is the one point which we want to offer, and it might be interested both for investors that the Polish state is offering that, and coming to once again to Prime Minister Belka, when Prime Minister has mentioned that he afraid of the initiative of the state initiative not to stop this process of slowing down. So well, this is the kind of activities that we see that the state, that the government is obliged to do, to deliver with the dialogue with economy. And I would say that we are not unique in Europe. Yesterday, on Friday, Minister Altmaier in Germany has declared that Germany is now arranging the special fund to be invest in strategic investments, not to be sold by the entities out from the European Union market. So so this kind of interventions is now being well recognized by many different economies, not only by Polish one. So this is the one point, and the second is what I would like to mention, that last year Poland has been recognized as the second best investment for the green field investments destination in Europe.
By the CEO magazine, as I remember.
Yes, it is indeed. So well, I can hardly find that someone is complaining beside the newspapers. Yes, it is. You can find it in newspapers, but I cannot find a proof in a real economy.
Okay, blame to media.
Not blaming, just observing.
Carlos, I would like to turn to you, because you are an optimist as well. You forecast 4% growth, as the World Bank Group does, for Poland for this year. What do you think? What will be the main headwinds for the Polish economy? So let's try to reshuffle the thinking. What will be the main headwinds for Poland for going US? What do we need to tackle here as Polish entrepreneurs, as the government, to remain at a 4% growth?
I think, let me just say first that as a macroeconomist, to follow Professor Belka is just a challenge, because there's not much that I can add to what he said. So it's an honor to follow him. I think, you know, we remain positive in the short term about Poland, and that's very clear. The dynamics of growth in the last few quarters, just mathematically, if you follow that, you get 3.5%, 4%. There's no question about that. I think what Professor Belka was saying, it's about the difference between deceleration and a crash is usually man-made. You know, what are the policies, what are the temptations, as Madam Minister said, that you should avoid in trying to keep a rate that is just not sustainable? And I agree, it's also, you know, it's not only temptation, it's a political year, it's an election year. So what better to, I'm not suggesting in any way that that's what it would follow, but it is a temptation. You only need to see fiscal policy in the United States. You know, why would you generate such a large tax reduction when you are in the middle of the longest expansion in the country? So, you know, and you see the results. Tremendous generation of debt. External deficits are still growing. It's not competition. It's an excess of demand over supply. So it's textbook economics, right? We are told when we go into school, you shall not do this if you are fully employed. And I think that is the challenge. It is, how do you present to people that you are doing tremendously well, and there is no reason for you but to accept that deceleration is good for you? Now, again, it's not more than usual that people will not accept the deceleration and will try to do something that is not acceptable from the point of view of policies. And that's where we remain, while we remain positive, we also remain not critical, but vigilant. That when I go into the discussion, I said, this is something that you should be aware of. You should not try to tempt fate by doing something that is not required at this point. And
what about investment in Poland? Do you see any risks for deceleration I was talking before, or no, you are at the same point as Minister Milewicz?
I agree with both speakers. I think you continue to hear the issue of employment as a limiting factor. I think, yes, there is a lot of noise about rule of law and all of that, but I don't see that as a main factor for that. I think even when you come to talk to people that are doing EU-funded investment, infrastructure investment, I talk to some of the companies that are, and they are facing trouble. The cost increases beyond that what they were expecting. So this is a real challenge for them. How do we keep implementing these projects when we see increases in wages of 7%, 8%? And it comes to the story that Madam Minister was saying, obviously, that is sustainable as long as productivity increases in the economy. Polish workers were cheap at one point in time. Of course, they're getting less cheap, if you will. And so at one point in time, companies like Orange will say, well, Is it cheaper to do it here, or is there a way for the government to support an increase in productivity that will address this particular increase in cost or not? And I think the ministry is doing trying to follow the right strategy in doing that, in supporting an increase in productivity, because that's the only way. In a country where it hasn't been mentioned, demographics are very negative. This is a country that eventually will get old very quickly. Where is this productivity going to come from? And who is going to save? Who is going to work? So how do you keep growth not beyond the term that Professor Belka was talking about, the 2, 3, but the 5, 10 years from now? Where will this country be?
Mm-hmm. Following your way of thinking, I would like to turn to Pavel, because the PPK program, so the pensioners, the employers' pension scheme, is going to be launched in the mid of this year. But of course, in the long term, as May said, it should be a boost for the economy. It should deliver some more savings for investment, both through the capital market and directly. But on the other hand, in the short term, that's another cost for employers that maybe will hamper economic growth and investment in the short term, because wages are rising quite high and they accelerate. How do you assess the cost-benefit analysis both in the short term and long term of the PPK program? Do you think that it might discourage in 1 year time companies from investing more? They will affect their margins or not? Or you are quite safe? That will be good. The companies do have large margins and they will be able to pay those additional costs for their employees.
So, in short, the answer is not.
Mm-hmm.
Central bank prepared some calculation about the impact of PPK for corporate profits, and they indicated that it's very marginal because they should offset the impact of the contribution to PPK by higher productivity, and also the scale of this is not so significant. Maybe indicating what Mr. Prime Minister Belka have said about the resilience of the Polish banking sector. This is the fact, and it always stabilized the economy. However, we need to take into account that the financial system is unfortunately strong most in one pillar, which is banking. Mm-hmm. And unfortunately, the capital market is weaker. The same case is in Eurozone or in Europe because of different financing model. And this is the reason why US is more flexible compared to Europe, and which is very much visible, especially after the financial crisis. It is very visible that in this new economy, which we are talking about, this technology revolution, capital market is more responsible for financing this transformation, the digital transformation, new technologies. You need more risk-type financing and longer view. Mm-hmm. So if we would like to have really strong financial system, we need both pillars, capital market and the banking system. And we are introducing a lot of initiatives with the clear view to strengthen the capital market, starting from the base, which is venture capital market, so the private segment. Last year we have introduced 28 venture capital funds because you need to address the early stage of development of companies, especially this more technology advanced. Second,
is domestic or foreign capital? That's mainly foreign?
We, as a Polish Development Fund, we work as a fund of funds, so we commit some money to the funds. We take private managers, and there is a private capital participation, so we mobilize private savings to invest in this segment.
Domestic
it's mostly domestic. Secondly, we have...
If I may add also foreign, because it is also one of our targets, since this market is not on this majority of development, so that is interesting that also the foreign venture capitals are coming to Poland.
Some investors start to come, both in terms of management teams and investors. Secondly, we have opened fund of funds for private equity, which is the expansion phase after the venture capital market, and this addresses the private capital market. And PPK, coming to your question, address the public markets in different segments, from corporate bond markets to equity markets, but also treasuries. We have international diversification up to 30%, but most of the capital should flow to the domestic economy, because we need the long-term, so-called long-term curve, so long-term financing. And after PPK, we will have the strongest investor base in the Central Europe. And there are already some research showing that it should translate into growth in investment and productivity, and should make the growth more balanced in terms of current account deficit, for example, because we rely potentially too extensively on financing from abroad. So, of course, I'm very optimistic that in longer term, this program will not only be beneficial from future pensioners, which with this aging society is very critical, but it will be very beneficial from the economy perspective.
And do you have any assessment of the general cost of the PPK program management for the companies?
I wouldn't call it cost, because we could say that, okay, increasing salary is a cost, it is, yeah, but the salaries are growing 6–7%. This is the trend. PPK represent only 1.5%, and with the participation roughly 70–75%, it means 1%. So it's not so material, but what I would like to underline that as Poland, we are not losing competitiveness, even despite this quick salary growth compared to other countries in the region. Because what is important for investor perspective, enterprise sector, is not nominal growth of salaries, but there are unit labor costs. So we, if, as you have said, if we are growing productivity, and we have huge productivity gap compared to European Union, 30%.
Yeah, 60% of the EU average, that's our productivity.
So more than 30%, we are able to catch up growing productivity with the salary growth. And this is actually what is going on in Poland. Of course, unit labor costs are growing 2–3%, but in some other countries in the region, they are growing double digit. So we are even improving our competitiveness compared to other countries with solid growth. I believe this year we will see something between 3.5–4% GDP growth, so it would be 2 times faster pace compared to Eurozone, for example. So coming back to PPK and salary growth, we have very good momentum to implement such a scheme. And I don't think that it represents the visible cost for companies, because it will be in the general trend of growing salaries.
Okay. May, do you agree that the PPK program could attract foreign investors to Poland as well? So a bigger capital base domestically, higher savings will also attract foreign investors to Poland, or not, or is independent?
I think the pool of assets that we're talking about is a decent amount. As we chatted earlier, it's about 0.7% of GDP per year, which will provide a boost for domestic capital market. I think from foreign investor perspective, as of now, there has been little awareness, or I guess because we don't have a lot of discussion on this issue so far in the last 1 year. Probably will pick up more when we are closer to the adoption of the program. But I think definitely it will bring some interest in Polish capital market from foreign investors. So far, there has been some setback because of the pension reform that happened a few years ago, and obviously the discussion on the rule of law at the surface has obviously make it a bit less attractive. But I would say that in general, Poland is a very stable asset class for investors, and there needs to be some trigger, some impetus for something new and interesting. I think this could be something that could bring in some more interest. But obviously, before we get there, we still have to head into the European election. We have to see what's the outcome of the EU funds allocation for the next decade. So there's a lot of issues that kind of intertwine together. But I definitely think that this is something that is a bit underestimated from foreign investors' perspective about the potential of new investment pool in Poland.
What Prime Minister Belka mentioned, exiting from the QE in Europe, that will be also an important factor for inflow of capital to Warsaw Stock Exchange and to Warsaw capital market as well, don't you think?
Definitely, I think it will have some spillover impact. We did some analysis of flows of funds from European investors when QE actually happened by the ECB. And actually you see that the allocation of funds to the rest of the world was more so than in CEE in particular. So probably because CEE has been benefited from the first round of monetary accommodation in Europe. And the search for yields go beyond Europe from that perspective. But obviously there will be some spillover if there's rising yields in the core European economies. But I would say that in general, as I say, Poland is perceived as a low beta asset class in the sense that people don't invest in Poland when the risk-on opportunity in the world. People, in terms of my coverage, which is more fixed income investors in Polish bond market, it's very much underweight. So I think from a positioning perspective, it gives an edge in terms of the QE exit on the potential risk of outflows of funds when the ECB exit. And obviously now what we're discussing is another LTRO in Europe as well. So I think the situation is still very fluid at this stage.
Okay, so no major headwinds from this point of view. There is one, however, topic that's very important in the public discussion in Poland that we did not mention. It's not usually in macroeconomics, but I think it's very important. I think electricity prices, which is quite important for inflation. We know that the electricity prices in Poland were freeze, but the electricity prices for entrepreneurs, for companies, are increasing. And I would like to turn to John. Do you feel the increase in energy prices in Poland at this moment as a company? Do you see the impact in the market? Will that turn also into inflation as secondary effects? Are you afraid of further increases in electricity price in our country?
So the answer is obviously yes, we see it, because it's been kind of an explosion of the electricity prices. So it's obviously another weight on our costs, another I would say inflationary trend in the country. But maybe I would. There is not much to comment. I mean, obviously, what for us companies has been a bit surprising is the fact that prices have been exploding very suddenly, and that it will for sure impact our businesses next year, but this year, sorry, and next year. And but the big question is more around the uncertainty, and I would like to come back on the appetite of investors in Poland. I was reflecting on what Minister Emilewicz was saying, and besides being the CEO of Orange, I have the honor to be also the president of the French-Polish Chamber of Commerce, which is having 450 members. So we have a lot of people around the table. When we do our round tables, and we exchange on the Polish economy and how entrepreneurs and companies are feeling in Poland, it's over a very positive mood. I mean, everyone is really keen on continuing to invest. People are happy to be in the country. There is only one question, and it's pretty classical but very important for companies and investors. It's about predictability and stability of the law, the fiscal environment, and the issue with these electricity prices is more from this nature. lack of credibility. There have been laws which have been passed in urgency in December, which we understand the reason why, but the way they are going to be implemented is not clear yet. So obviously, I mean, this is a small thing amongst a number of very positive things in Poland, but if there is one topic that when I discuss with the people around this Chamber of Commerce, one thing that our members are telling us is that obviously the more the country is predictable, the more there is stability, the more people are obviously keen to invest.
Yeah, and you see that not only in the French Chamber of Commerce, but also for other foreign direct investors. Hans, I have a question to Minister Emilewicz. Having business on the other side of our here round discussion, how would you ensure that the economic policy is stable here in Poland? So don't be afraid. What would you say to the business in Poland to encourage them? Please do not be afraid.
I do believe that I am confirming it during every single meeting with the business which is present on the Polish market, both origin, foreign and domestic, both the big and the small one. And the mainly factor is that what we promised 3 years ago, we deliver simply. And in terms of the changes, like tax permissions, delivering a new special economic zone, law, or the special tax permission and tax reduction for the smaller businesses, and also a reduction of bureaucracy, which we deliver in a so-called Constitution for Business and the package for small and medium size. So we are credible because what we deliver, what we promise, we simply deliver during those 3 years. But if I may jump into the energy prices, because it is something that, of course, if I may say, it is not I can hardly find any discussion regarding rule of law when I'm discussing the issues with the business. The question regarding labor market, and the second one is the question regarding the energy prices. And not later than tomorrow, we've got the first interministerial committee meeting, the committee established by Prime Minister regarding dispersed energy and the prosuments approach to be delivered and to be developed on the broader size that it is that it is permitted right now. So we want to extend the prosument status not only to the private single person, but also to the small and medium size and local government. And as a third step, of course, we are thinking about the bigger companies, but those two are the first for us, because we do understand that what was crucially important at the end of the last year was really unconsciousness in the small and medium-sized business, but also in the local government, which is delivering the services. So tomorrow we've got the first meeting, and as I promised, in the next 2 weeks I'm going to deliver the special amendments to the law, which is now in a public sphere, and which need to be transformed if we want to have this market to be developed. And the second big group is the intensive energy consumers, which is a little bit more than 50 entities on the Polish market, which are consuming more than 30% of total energy production. And of course, for them, the changes in the energy prices is absolutely crucial, and they are responsible not only of the highest amount of the total production in Poland, but also they are delivering the enormous number of the labor places to the Polish market. So that is why we are delivering now the special regulations for them in terms of the prices, for energy prices, but also special mechanism of compensation, which is not something unique in the European market. We've got the benchmark from the Germany and the Spain as well, and we discussed it with the Commission. So this is a safe in this matter, and this is also something that we promised and we are delivering right now.
Could you elaborate a little bit on how this compensation mechanism works?
First of all, we think that that we will be able to deliver it, and the compensation will be paid back for the 2018. Nowadays, we know because of this unconsciousness of the last year, we want that this mechanism is going to be introduced since the beginning of that year, and there is a special algorithm which we deliver if you count when you count the price of the energy in a total price of the product you deliver, and there is a special margin which the highly energy consumer will be paid back from the budget. Actually, not
from the budget.
Not yes, it is not from the budget, from the special fund, and the money in this fund are gathered for the permissions to the CO2 emissions. So, and this is actually the proper way how this money are going to be used.
And the European Commission is likely to agree on that?
Yes, it is. It is similar, as I mentioned, to the mechanism accepted in Germany 2 years ago. So this is on the similar measures, and this is and since it is introduced to the very clearly defined entities that are allowed to this mechanism, so there is no problem with the Commission and with the public aid as well.
And do you see any problems or risks in the energy sector itself, because the energy prices were freezed, the revenues are falling of energy companies? Do you think that they might get into trouble? They need some government support? You're discussing that?
I would say that in terms of the Polish economy, the energy sector is the biggest challenge for us today because of enormous amount of money that we need to invest in this sector. And what we need to do it mutually. Basically, we need to have some investments in the traditional energy production sector, because it is simply the term, mainly the Poland is based on the traditional 200 kilowatts infrastructure constructed more than 30 years ago, and it is exactly the momentum which we need to invest in them. And based on coal, but of course we need also to develop, to be in line with the European policy. We need to invest in renewables, and as you know, we declare to start and to speed up the investments in offshore. And since some permits are going to be finished at the end of this year, so the next step should be done in this matter, and that is why we are pushing. We are trying to push this year this prosument approach, because as we see, if you think that we introduced from the beginning of this year the thermomodernization discount, so every single person who invests in photovoltaic installation, they can count it off from the tax declaration. And if you see that the European Commission reduced the taxes for the photovoltaic since the beginning of 2018, so the general cost for this investment is really very, very low, and it is really low for the every single citizen, but also it is very low for the medium-sized company. So we see that this year might be the revolution in the prosument, and we do believe it, and that is why we are having a dialogue with the, and it is not going to be very expensive from the budget point of view, because if you take all the costs, if you have a good bank product, it can't be financed by the good tailor-made for the prosuments product. So I do believe that we will speed up in achieving the European goals in this year by the development of renewables.
I would follow that trail and turn to Paweł. What are the main targets, or what should be the main targets, really, of investment from the viewpoint of the Polish Development Fund? Is it the renewables energy or the energy sector in general? What are the priorities when you think about supporting investment in the Polish economy?
What I'm saying from the beginning of the Polish Development Fund, that we should be relatively small, because it means that the market is working well. So our top priority, as I mentioned in the beginning, is to facilitate development of the private capital market by the initiative I have mentioned. Of course, we have the activity, direct activity when we invest directly. I believe that for such an institution, development institution as Polish Development Fund, infrastructure is a key. We focus on infrastructure investment, promoting also PPP, which is not very popular now in Poland because we have still a lot of EU funds, but sooner or later it will develop because we will need another structure of financing public investment with the participation of the private sector. For sure the infrastructure investment, whether they are this is transportation infrastructure mostly, but also energy.
Renewables?
Yeah, we have already started few projects. And I believe that, always there are some pros and cons. Yeah? So for sure we need to invest huge money in this energy transformation. Maybe we are in some delay, but there are also some opportunities coming from that. First, we could leapfrog the technology because, the efficiency of some technologies is still very low. So now it's increasing, for example, for solar, year by year. So now we could invest in new technologies. The second positive is that we could take the experience of some neighbor countries, for example, from energy Wende, when they invested hugely in renewables, but the base was not fixed, so they need to invest in traditional, conventional energy. So it's clear that we need to manage properly the mix, so we are ready to invest still in conventional, whether it is nuclear or conventional energy, and of course
in
renewables.
Nuclear power plant?
Excuse me?
Am I heard right? You are thinking about financing the nuclear power plant?
I already said it, that if there will be such a need, we are ready to do it, because this is one of our mission. I believe in diversification, because for almost 20 years I'm doing investments, so I know that diversification is the key. Don't put all the eggs to one basket. Yeah? So the same, especially this is important with long-term investments, such in energy. So diversification is the key. So in all of the segment, energy, transportation, all this infrastructure, we're active.
Okay, thank you. We still got 13 minutes left, so I have a question to Carlos, but before that I would like you to think about your own questions, because we will have a couple of minutes for a Q&A session. But my last question to Carlos is, let's take a bird's-eye view perspective from Poland. What major headwinds in the external environment for Poland do you see? Is it the Brexit? Is it a crisis in China? Trade wars of the United States? What could be the main risk for Poland, so downward risk, for your forecast for this year?
I think, frankly, all of them. I think you cannot point to a particular aspect or factor that you just mentioned and say this is the one. But I think if you look at what's happening already in China and the slowdown in trade in East Asia, that's something that is coming. And I think it's likely to affect Poland indirectly, obviously. Brexit, Germany slow down. All the uncertainty and the trade wars. The question is, we as economists, we would love to say the crisis is going to be on August 1st, 2018, or 19, whatever, and this is what's going to happen. But it doesn't happen that way. Yeah. Never happens that way. It happens one day somebody wakes up and says, oh, my God.
The crisis is here.
He's here. The banking sector in China, as an example, for example. Who looks at this and somebody just wakes up to the fact the number of non-performing loans, the number of bankruptcies is growing very fast. Even in the US, frankly. I was looking at some numbers of overdue payments and consumer loans. It's the highest it has been in 10 years. So there are signs that there are things to come. I think the good thing for Poland, and I think Professor Belka hinted at this as well, is that Poland is at a good place if something happens, meaning it has the policy buffers to address some of, like it did in 2008. It doesn't come into this situation, you know, not having high debt like many other countries.
But are we in a better position right now than we were in 2008, or at a worse position? Because, for example, as Prime Minister Belka said, banks are not that good prepared as they were.
No, I don't think he said that. He said that he wasn't sure.
He wasn't sure. Okay, yeah, you're right.
He left. Okay. I think that because you look at the numbers and you say, okay, capital adequacy ratios, like the standard ratios, you see they're fine. Yeah? Level of capital is fine. NPLs is relatively low. The question is, and it's a question for any country in the world right now, in Europe, after 10 years of very low interest rates, what is going to happen when you have a synchronized increase in interest rates? What is going to come out of this?
We do not know, really.
The companies that you have been maintaining because they are paying 0.5%, 1%, whatever it is, what's going to happen to them? The number of countries, if you look at middle income and low income countries, have incredible amounts of debt now relative to GDP. What's going to happen to these countries if there is an appreciation of the dollar, a continued appreciation of the dollar, and an increase in international interest rates? I don't know. It's very hard to say. We know the direction of the change. We don't know the magnitude of the change that's going to happen after this. I think countries like Poland are well prepared to address the ramifications of these shocks. The question is when and by how much.
Okay, thank you. Now, I would like to turn to the public. Do we have any questions? We have one question here. Do we have a microphone? Please.
Hello, my name is Katarzyna Ostrenga. I'm from Student Science Circle, Political Economy. And as everybody knows that Poland just achieved the status of the developed country, and we are the young member of that group. And as Ms. Ewelewicz mentioned, we are still hungry for the developing. So my question is to Mr. Falash, Jean. Have such big countries, companies, think about outsource or create new offices or even move headquarters from the big cities to the smaller cities in Poland, such as Łódź, because in Warsaw, like running the office is very costly, and in Łódź, for example, the smaller city, the labor force is less demanding and the costs are lower. So, is it a good strategy for such a big companies as Orange?
Yes. Well, of course, it is a good strategy, but you know the history of Orange in this country dates quite a long time because we are former Telekomunikacja Polska. So actually, out of the 14,000 colleagues working at Orange, you have only 6,000 working in Warsaw. The rest of the people of Orange are working actually everywhere in Poland. So it gave me the chance to visit a lot of cities in your beautiful country. So we are everywhere, in Łódź, in Katowice, in Lublin, in Gdansk, in Szczecin, we're everywhere. And you're absolutely right. If you zoom in, the market conditions are not exactly the same in the different cities. So this also creates some opportunities and sometimes some difficulties. But actually, in the case of Orange, this is already a fact that we are present in many cities across Poland. To come back again on some companies that I know very well. Again, if you look at the French-Polish community, there are a number of big industries that are outside Warsaw. I think of Michelin, for instance, which is a huge investor, which is big factory is not in Warsaw. I mean, if you take the large distribution companies like Auchan, Carrefour, they are all everywhere in Poland. So I think if you look at the large companies, they are already present in most of the places in Poland, not only in Warsaw, actually.
Of course.
Yeah, may I amend the question asking whether you could contemplate to move the headquarters from Paris to Warsaw of Orange?
You should ask our CEO, our group CEO. This is not a question for me.
It was the news. Yeah.
Okay, thank you. Any further questions? We have someone who'd like to ask about perspectives. Yeah, back there.
Thank you. My name is Piotr Cichocki. I'm representing the European Youth Parliament and the Warsaw School of Economics. My question is to Mr. Piñeira and to Mr. Emilewicz. Do you think that Poland will have to amend its 3/5 threshold of debt to GDP ratio in the next parliamentary term?
We'll have to. That's a very tough question. I think I am not a big fan of fixed rules. By that I mean that sometimes situations call for dramatic action, but you have to be credible about it, right? I think if given the credibility of the policy framework, the macroeconomic framework of Poland, Poland could afford to tell the market, I'm going to deviate from this target, and still come out well. Of course, you know, it's a question of credibility at the end of the day. But I am, and of course I'm not a European, but it's easy for me to say that these rules were made to be bent, but not broken. And it's a question of the situation. I think if the situation gets dramatic enough, you should allow yourself, and I think Poland did that in 2008. We're going to react to the crisis accordingly by expanding fiscal policy and making sure that we maintain demand to a level that doesn't allow the economy to go into full recession.
Mm-hmm.
Well, I think that flexibility and potential to create your own both fiscal policy, but also, let's say, fiscal policy is something that that allowed you to really overcome the recession, the crisis. And I think I remember my discussion with my colleague from the United States. It was many years ago for one of the scholarship programs, and he used to work for the American administration, and we've got a huge discussion regarding the constitution for Europe at that time. And we were discussing what's on, if the governments are not going to, and the parliaments are not going to support the reform, and is it going to be the end of the world, and the European Union is going to collapse. And our American friends told us, because we've been in the European International Communion, and he told us, well, guys, the policy is simply to answer something what is uncertain, and it is not going to be collapsed. So there is a new situation, and you have to overcome it in a completely different way. So the very fixed rules and regulations are not in a favor in overcoming the crisis. So I would accept and agree what you've mentioned before, that to be, well, to bend, not broke. So I think that is the approach which we share fully.
Okay, thank you. Any further questions from the audience? No, then I have a final question to the audience, because you are all filling in the forecasts. Who wrote down that the growth rate, GDP growth rate next year will be below 3%? Because here in the panel, no one, as I heard. Everyone is believing it's 3 plus, even 4%. Anyone in the audience said 1? Okay, great. So that are the odds. We'll see in 1 year's time who will get right. Thank you to our panelists. I would like to sum up with what Carlos said, that the thought that we should go home with is that make us believe that the acceleration is good for us. So please go and say that to your colleagues, friends, business partners. The acceleration is good for us, because otherwise maybe we are in an overheating process. So thank you for having. Please an applause for our panelists.
think that we all are waiting for the good champagne for the New Year Eve from the person who is expecting 2% for the end of the year. So please drop us the others.
Dziękuję Państwu bardzo za udział w konferencji.